Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, June 22nd, 2010. Well, folks, the markets are rolling over in dramatic fashion this afternoon, much like they did yesterday in late trading. Now, what's going on here? Well, essentially, you had some more bad data this morning. We all know about the reversal from yesterday morning, and again, you can see it right here on the charts. The markets on Monday morning gapped up on the back of that yuan news, where again, China's going to let that float a little bit higher against the dollar. Now, it's very, very small, but as I explained to my nightly viewers of the Research Center nightly video, 40 minutes in length, again, if you take a look at the dollar daily chart, let me pop that up, you can see that going into that announcement by China, the market on the dollar had already fallen dramatically. Very, very dramatic fall here on the dollar going into that. What that tells me is the move was already factored in. Now, granted, you, me, everyone else may not have gotten the news out there before it happened Sunday, but basically the big players out there in the market knew that ahead of time, and that's why you saw the dollar fall. So ultimately it was already factored in. Therefore, when the news comes out, the little guy says, hurrah, let me go short the dollar, and we see the market again reverse on the dollar. So all of a sudden the dollar starts to go up. In the last 2 days since that announcement, the dollar has gone higher, and that's where we're sitting at this point. So again, the news was out there to the big boys already. They were already dumping the dollar. Now the dollar's been dumped. The amateur shorts the dollar. Therefore, what do we know about the amateur? The amateur, the retail investor, the markets will go the opposite way of that person or that individual. Therefore, the dollar goes up. So you have to know the game, guys. Learn to play the game. Play it right, you'll make money. That's the simple answer. Going back to the SPY. Now, this is the dollar, this is the SPY daily chart. Again, you don't necessarily want to focus on this for now because this is for the nightly video viewers. I'm going to analyze this. We have some big pattern formation here, possible WV action going on, which could tell us about a possible move in the next week or so in this market that we will be playing and making money on, just like we made money on the short side of this market as well. But we're going to go to the intraday chart. Now, what are you seeing here? Obviously, the gap up yesterday. Beautiful gap up on the charts at 113. 113 was a master level. We called that out as much as 2 weeks ago to be looking for that as your shorting opportunity for this market. Pro Trader watch list was put up with a lot of bearish plays. You know, plays like ExxonMobil bearish as of yesterday's open. We had long on the hot charts and alerts going long the SDS, which is 2 times short. Made a nice bundle yesterday on that shorting opportunity in the market as well on the rollover. But bottom line, you had to know this level. Once that level was breached and hit, that's your shorting opportunity. Again, late day on Monday, we saw Monday Mutual Fund reverse selling. And again, now with a little bit of an early pop, the market's consolidated all day long. Please notice this pattern, folks. The sharp rollover, the sharp move down, the consolidation sideways today. What type of pattern is that? You should all be aware, whether you're premium members of the Research Center. Obviously, you guys in the Research Center know for sure. But otherwise, you should still kind of have this idea from watching these free videos that this is considered an in spirit of bear flag. Bear flag, the name tells you what it's going to do. Ultimately, it's going to break down and fall through the roof here, or through the floor, I should say, all the way down to the next major support level. Now, what I said to the members today, I said, guys, watch the level right here. I said, if this 110.80 level breaks, which was the low of the day from yesterday, this market will dump out significantly, probably to about 110. Although, again, right here at 109.75, you have a trend line that looks like we're getting support. See the trend line? The trend lines appear because I put them on the chart from as much as months ago, and we're now coming into play on them. But otherwise, you should see this market roll down dramatically if it breaks this level. The market did break that level, and look at the fall you've gotten. You've gotten a dramatic fall. The SPY is now down a total of basically $1.50. That's a big drop. I mean, that is a big drop. You're talking about over a 100-point drop, close to 150 drop on the Dow. Dow right now is down 115 points. So dramatic drop here. We are getting a little bit of a bounce off this key level. Now, again, what are the next key levels? What I'm going to do is I'm going to shrink the chart down here, and you can see this is the chart. These are all your key levels on your intraday chart. Here's your bear flag formation. Look at that beautiful bear flag. Consolidation all day until right around 132 when we started to break down here. Now we're approaching 3 o'clock. The market just came in. By the way, holy cow, what level did we just hit? What's the 109.75 level? Take a look. 109.75 is gap fill going back to the 14th of June. 14th of June, folks. This is gap fill. You have to know this is the key level. All right, this is such a key level here. Gap fill right here. Look at the yellow line matching up with this last candle. Look at the gap right there. That's your level of support. That is good support. All right, this level from 109.75 to all the way down to this little pivot low here at 109.50 is going to be a lot of support in this market. I think we may have put in the lows for the day, believe it or not, and I'm going to just go out on a limb here with about an hour left to go, and we'll see if that's the case. But that is a fair possibility that this gap fill is now the lows of the day being put in with 1 hour left in trading. So in any case, some action here on the downside of this market. Market getting hit dramatically to the downside. Again, it's all shown on the charts, and this is the beautiful thing about it. Price, pattern, and time. What we preach, our methodology here, will tell you every move on the market, every play is going to bounce it, whether or not you're forming a bear flag or a bull flag, and what to expect off of that. It's there for the taking, folks, right here. Now, volume today is not that heavy. It's definitely increased on the sell-off here, but it's still not that heavy. Again, you have to watch for volume because volume obviously dictates how many institutions are dumping or how many institutions are buying, depending on if the market's down or up. Remember, of every day's volume, basically 85-90% of it's institutional. You have to always recall that. Remember, these black box trading programs, everything like that, overpower the individual retail trader out there by a ton and the individual investor for sure. So that's what you're seeing. Beautiful bounce off this gap fill. What a bounce here. You're now talking about a 25-cent bounce as we're back above 110. That is a nice bounce. All right, let's go to the 60-minute quickly. Here it is beautifully, guys. Look at this pivot level right here. And again, nice little candle formation on the 60-minute chart. Came right in there, and that's the level that you were looking for a possible little support. You are getting support there. Now, if this breaks, if this 109.75 level does get taken out later today, you're going to go right here. This will be your next stop. This pivot low going back a ways, and that's at 109, 109.50, which was the low end of that gap fill area. The 60-minute chart obviously looks a little different because it's 60-minute candles instead of 10-minute candles. And if you get through that, then you're going to go down to the 109 level, which would be your next level of support after that. If you take that out, then you're going all the way back to 107.50, 108 area, which will be another major level of support. But again, remember, this is intraday analysis, so I'm covering the intraday. If you want that nightly viewpoint where you can go swing trade it for the next day or put your swing trades in, make massive amounts of money like our premium members have done, and again, pretty much every day closing out more and more positions for profits left and right that we're taking, and again, we're very careful as well. Not only are we good at what we do, but we also make sure we don't take overly big risks, and I think that's the bottom line, folks. It's all about having your risk reward at 80 to 90% success rate. So 8 to 9 out of every 10 plays, I expect to be winners. You're never going to be 100%. Anyone who tells you in the market they're 100% is lying through their teeth, but the key is to have that ratio as high as you can without really jeopardizing, the risk reward basis of the trade, all right? And again, that's what it's all about. So let's take a look at a couple stocks. What are some stocks doing today? Financials are mixed today. Goldman Sachs is down about $1.50. Taking a look at the intraday on Goldman. Goldman again rolling over here, but $1.50 is not that bad for a market that's down over 100 points on the Dow right now. But what I would say is JP Morgan has actually dumped out pretty dramatically on this sell-off. Look at this. JP Morgan was actually at the highs of the day until the market really started to roll over. Now JP Morgan is only down 15 cents. So overall, the financials are not getting hit too dramatically. But again, they have rolled over pretty decently in the afternoon session. What's the big drops today? That would be ExxonMobil. Exxon is down big. This is a big market component, one of the biggest stocks out there, biggest market caps out there, and Exxon is down about $1.10 on the day. That's a dramatic fall on Exxon. If Exxon on the daily chart, believe it or not, comes down into this 20 moving average, it's probably a decent little long play. I would say so anyways. And again, this was added to the Pro Trader watch list on the bearish side yesterday. Why? It was added right here at the 50 moving average because first hit methodology dictates that's going to be your shorting level. So bearish traders, obviously traders looking for shorts out there, the compilation of in the money stocks traders, we're seeing this, and again, they all added it, or majority of them added it to the bearish watch list, therefore it gets added up on the Research Center's bearish watch list. You can see, look at that pullback since then. It's a beautiful trade to the downside. All right, folks, I think that's about enough for today. I encourage you to join the Research Center, not only to make money, but the learning and the education is second to none, folks. That's honestly what I strive for. Yeah, I give out trades that are winners, and we make a lot of money and stuff, but bottom line is, I'm here to teach you how to fish so you can do it on your own. I'm never going to cover every single stock out there. There's too many. But I can teach you how to go look at the charts and do it yourself in a relatively easy manner just by isolating price, pattern, and time. No nonsense on stochastics, RSI, blah, 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 MACD. We want to focus on the easy stuff that you can do, and it just simplifies it all, and you can make money consistently. Again, my rate is 80 to 90% out of every 10 trades, or 8 to 9 out of every 10 trades. Take care, folks. Join the Research Center or the chat room. We'll see you soon.